Good morning, students. I have come with a new module, Final Accounts with Adjustments. This is Final Accounts Module 8, and as I told you, I will be explaining two adjustments in each module, and I will be doing the problem also to make it clear with the illustration. So, two adjustments I have selected for this module are one is closing stock and second is outstanding expenses. So now what is closing stock? You know that closing stock is the stock on the closing date of the balance sheet. Now when is the closing date of the financial year? That is usually March 31st. So because you know that financial year starts with April 1st and it will end on March 31st. So March 31st they will physically count the stock and they will keep the closing stock. So it will appear outside the balance sheet or the trial balance. Now you have to remember that closing stock is always valued at cost or market price, whichever is less. Because you know that as per the accounting principle, we will never anticipate profits and we will include. We will always show at the lowest possible value. So either market price or cost price, whichever is less will be the value of closing stock. And it will always appear outside the trial balance. Now always you have to remember, if an item is appearing outside the trial balance, there will be two adjustments. One adjustment will be in the trading and profit and loss account, and second adjustment will be in the balance sheet. So closing stock, the two adjustments are, one is it will come in the credit side of the trading account. Second is it will come as on the asset side of the balance sheet. So two adjustments, I'll repeat, credit side of the trading account and second is asset side of the balance sheet. Now, what are outstanding expenses? Outstanding expenses are expenses still to be paid for that financial year. See, for example, if an organization is paying salary on 1st of every month, that meaning March 31st we close the financial year. So March salary will be paid on April 1st. It's related to the previous financial year, that is March financial year. So that is outstanding. Salary for March is outstanding. Salary up to February is paid. That will come in the trial balance. But salary for March will come in the outside the trial balance. So this, what are the two adjustments? One is it is added to the concerned item. See, if it's a wages, it will be added at the trading account. If it's salary, it will be added on the debit side of the profit and loss account. Now, always you have to remember it's a liability. The firm has to meet this expense. So it's a liability, so it will appear in the liability side of the balance sheet. Now let us do a problem. Prepare the trading and profit and loss account of Mr. C as on 31/3/22 from the following trial balance. Capital, credit side 1,60,000, drawings 45,000, building 60,000, goodwill 90,000, machinery 40,000, bills payable 33,800, bills receivable 3,000, creditors 70,000, debtors 45,000, returns outwards 2,650. Now, returns inwards 2,000, carriage on purchases 1,000, carriage on sales 500, furniture 4,200, salaries 35,000, wages 25,800, opening stock 40,000, sales credit side 2,18,000, purchases 51,000, bad debts 1,200, rent 6,100. Now, general expenses 9,250. Cash in hand 25,400. So, total of the trial balance 4,84,450. Now, three information is given outside the trial balance. So, that meaning we have to remember that these three items, two adjustments are required. One in the trading and profit and loss account and one in the balance sheet. So, the three information are closing stock is valued at rupees 4,000. Salary is outstanding rupees 5,000. Wages is outstanding rupees 200. Now, let us do the solution. Trading and profit and loss account of Mr. C as on 31/3/22. The format is very important and you have to write the heading. Everything should be in the proper format. So, to opening stock 40,000 on the debit side. To purchases 51,000 less returns 2,650. Outer column 48,350. To carriage on purchases 1,000. To wages 25,800. Add outstanding 200. So this is one adjustment. Wages, it's outstanding, it's shown in the outside the trial balance. So we are adding here 200. Outer column 26,000. Now credit side, by sales 2,18,000 less returns 2,000. So outer column 2,16,000. By closing stock 4,000. So when you take the total, credit side is higher 2,20,000. Now you have to balance the debit side. You will get 1,04,650. Since it's profit, it will be transferred to credit side of the profit and loss account. If it was loss, it would have been the opposite adjustment. That is, it will come in the debit side of the profit and loss account. Now, debit side profit and loss account, to carriage on sales 500. To salaries 35,000, add outstanding salaries 5,000. Outer column 40,000. Remember that this item was also out of the trial balance, outside the trial balance. So we are adding here. To bad debts 1,200, to rent 6,100, to general expenses 9,250. Now, credit side, we have only one item, whatever the gross profit transferred from the trading account. By gross profit brought down 1,04,650. So that total we will write on both sides because credit side is higher, 1,04,650. Now when you balance it, you will get to net profit transferred to capital account, 47,600. That is the balancing figure. Now let us do the balance sheet. Balance sheet of Mr. C as on 31/3/22. Capital 1,60,000 to start the liability side, and net profit 47,600. This value we got in the profit and loss account. Remember, if it's a loss, we have to subtract from the capital. So here it's profit, so we are adding 2,07,600. Less drawings 45,000. So in the outer column we will write 1,62,600. Bills payable 33,800. Wages outstanding 200. Salary outstanding 5,000. Creditors 70,000. The asset side, building 60,000. Furniture 4,200. Goodwill 90,000. Machinery 40,000. Bills receivable 3,000. Debtors 45,000. Closing stock 4,000. Cash in hand 25,400. So total of the balance sheet 2,71,600. Always I'll tell you, you have to check that whether balance sheet is tallying. If it's tallying, then it's sure that your calculation is correct. If it's not tallying, go back and check the entries once again. So here in this module, two adjustments we have covered. One is closing stock. This item is appearing outside the trial balance. So two adjustments will be there. Closing stock will appear on the credit side of the trading account. Second adjustment is it will be an asset in the balance sheet. Similarly, outstanding expenses. It will come either in the trading account or profit and loss account. We will add with the concerned item. If it's wages, it will come in the trading account. So we will add with wages in the trading account. If it's salaries, we will add with that in the profit and loss account. In the balance sheet, it's a liability because it's an amount still to be paid. So these are the two adjustments we have learned in this module. Happy learning. Thank you.